So the stock market has recovered nicely from the lows, but when it comes to most sectors, they're still a long way from where they once were. That's not true with certain industries, though. And some of them kind of snuck up on me. I know Tyler and I, we've been talking about the home builders as an opportunity for some time now. And then he said, surprise, the home builders are at their 52-week highs right now. And I looked, and some of them are. I mean, even from the asset light home builders like NVR to the traditional home builders like DR Horton, who built my house, they're all within like 3 percentage points of their 52-week high.
Yeah, this
So,
wasn't just like, one or two of them. The whole industry is at 52-week
right.
highs.
I mean, the one I follow most closely is Dreamfinders Homes. And I think they're the worst performer, and they're like 7% off their high. So my question is, now that earnings season's about in the books, is this because the numbers were better than expected, or because we think the Fed's rate hike cycle is over and mortgage rates are going to come down and there's a lot of future optimism?
I would say it's a little bit of a blend of the both. I don't know if I would go so far as like lowering of mortgage rates, but maybe just kind of a normalizing, perhaps flattening, where people can kind of adjust to it instead of, getting a haymaker of 2% mortgages up to 6% mortgages in a matter of 18 months. So with a kind of a normalization of mortgage rates, people are kind of buying again. And what I found surprising, it was a data point. This isn't the most precise number because I can't find it again, but the percentage of homes sold that are new build homes, so from home builders, it's gone from like 10 to 12% up to 25%, because existing homes, like we were just talking, with those with low rates are less likely to be selling now. And so the inventory of existing homes is still quite considerably lower, even though you have new construction. So home builders are kind of the only place people can go to buy homes now. And yeah, mortgage rates are higher, but life happens. And so we're seeing a lot of the things happen where, structurally there are demand from the Gen Z generation, the millennial generation catching up. There's a lot of, secular demands going on right now. And you kind of see it in the numbers too. Cancellation rates for a lot of these home builders are going back down. Gross margins are still trending a little bit back up. We're not, 52 weeks highs. They're not like past their all-time high for a lot of these companies, but it's pretty clear now that I think the worst of what we saw from this, you know, oh, home builders are going to get crushed in this rising interest rate mortgage environment and nobody's going to buy, everyone's going to cancel. I think we've wrung out much of that concern, and getting back to a little bit more normal home building cycle after, I don't know, 3 years of up and down with COVID down, inventory shortage up, back down again. I think we're kind of getting back to the closest thing to a steady state for the home builder industry.
Yeah, I feel like, investors are starting to think that the worst is over. I like that you brought back the higher share of the market compared to existing homes. It's actually an all-time high right now, which is pretty nice. So that's a nice little unexpected tailwind that they're getting. And with the cancellation rate dropping, I follow Dreamfinders Homes pretty closely. Their cancellation rate dropped from 32% in the fourth quarter to 21% in the first. It feels like buyers are accepting the new home buying market in terms of both mortgage rates and home prices a little bit more than they were. And it's causing the industry to normalize.
Yeah, and also I think it's worth pointing out too, certain types of homes that are doing a little bit better. So, for example, move ups and luxuries. So people who already have some built up equity in their existing homes and they're able to kind of move up into the next level, you know, flipping equity and things like that. That has been much more robust than the entry level, which is still hitting a little bit of affordability issues, excuse me. For example, LGI Homes, they are at their 52-week high, but their sales numbers are way down from where they were pre-COVID. or just a post-COVID sort of boom, for the simple fact that they're exclusively a entry level builder, and that's the one segment of this market that hasn't quite as robustly um, recovered relative to the others.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.